So I know many of you may not want to hear this, but the reality of it is the biggest enemy to many of you guys' wealth and financial health and well-being is going to be the relationships that you keep around you. This video is going to be touching on the deadly nature of financial entanglements when not vetted properly, and how they can crush your banking relationships, how they can crush your wealth journey before it even really gets started. And a lot of you probably can attest to this through personal stories. And for those of you who may not be familiar, financial entanglements, we're talking about joint bank accounts. We're talking about, everything from like third-party checks for negotiating third-party checks for people, co-borrowing, co-signing. We're talking about financially entangling yourself with one or more other individuals and dealing with the negative consequences of that relationship going awry, or that other party potentially performing or acting in some unhealthy way financially, or with that banking relationship or with that debt. So we're going to be talking about how this impacts your finances, your wealth journey, your banking relationships. We're going to be talking about the risk factors. We're going to be talking also about some interesting statistics towards the end about joint ownership and joint owner accounts and things of that nature, and some interesting stats that should teach you something about your relationships and money. And then, of course, as we do in every live stream and I strive to do in every video, we're going to talk about just overall solutions on how to navigate this so you can minimize or avoid this altogether. And if you've been down this road, hopefully you just can not go down this road again. So for those of you coming into the live stream live, make sure you leave a comment. I see a couple of y'all already coming in, leaving your likes, leaving your emojis, jump in the chat. Let me know you're in the building, and I will definitely give you a shout out. If you're looking to have any specific questions answered, or you want to have something addressed particularly, then leave a super chat and I will be sure to get to that for you. Other than that, I'm going to give general shout outs, and then that's going to be it as far as the chat is concerned. I'm focusing on the super chats when it comes to actual questions, or if you need me to elaborate or go into details on things. If you're catching the replay, leave your like, leave your comment, leave your support, leave your stories down below if you've already dealt with the negatives of financial entanglements, or leave your stories down below if you have positive experiences with financial entanglements. We'll get to that towards the end of the live stream. So for everybody, welcome in. It's a pleasure to have y'all. And let's get into the topic as well. So let's get into the initial backdrop of why financial entanglements can even be impactful whatsoever. And the first way we're going to do that is to discuss the value of a banking relationship on your journey to building wealth. That is essential because most of your financial entanglements are going to happen at the bank. So we need to discuss why it is important to nurture your banking relationships and protect it at all costs, and to avoid anybody joining onto your finances through your bank accounts, through any debts, etc., that can be a risk to your finances. So a strong banking relationship is extremely important to building wealth, as it provides access to better financial products, expert guidance, and capital during crucial moments. A transactional approach, simply seeing your bank as a place to deposit your money, is a less effective way than nurturing a genuine partnership over time. So your banking relationship is absolutely crucial to your wealth building journey. So just some key high notes on how the banking relationship aids wealth building. Strategic guidance and financial literacy. Your bank is going to be a central ground zero place for that. Better loan and credit opportunities. Important. Higher levels of customer service. Access to exclusive opportunities. What does that look like? A strong banking relationship can open the doors to opportunities you may not otherwise know about. Bankers often have extensive networks in local business communities and may connect you with potential investors, partners, and clients. Man, if this is not an underrated part of your banking relationship that 95% of you do not tap into. Personalized products and services. Instead of being offered generic financial products, a bank that knows your goals can provide customized solutions. These might include custom savings plans, business credit cards tailored to your spending, or more efficient cash management systems. So you can't build wealth if you're not optimizing the money that you have. That's just facts. You have to be a good steward of what you have to get access to any additional resources. So let's dive into what financial entanglements can do to the detriment of these relationships. So let's start with the risk of joint bank accounts. A joint bank account, or risk of a joint bank account, can include sharing liability for debt or fees, creditor access to an entire account, and losing control over your funds. Each owner can withdraw all funds, so that's something important for y'all to know. And one owner's financial problems like unpaid taxes, lawsuits, divorce can negatively impact the account and other owners' credit. Additionally, a joint account's funds bypasses your will, potentially creating estate disputes and tax implications if not a spouse. So what that basically means, and I'm gonna get to that deeper in a minute, you having a rights to survivorship account, which is pretty common in a lot of states, in a lot of different states when it comes to bank accounts, meaning that you and another person are on a joint account, and something happens to one of those parties, the surviving account holder automatically gets access and ownership of the funds left in the account. And that could be even over a will. So you can have a joint account with just a friend or whatever the case may be, a roommate, whatever, somebody that's not as close to you, and they can get access to funds, potentially, and ownership to those funds before your kids, even if you have a will set up. Very important. So financial and legal risks, shared responsibility for debt. If one account holder incurs debt, overdraft fees, or other charges, the other owner is also equally responsible for the liabilities. You can see where this is bad already. Creditor access. Your money becomes vulnerable to the joint owner's creditors, who can garnish the account to satisfy the other owner's debt or court judgments. I'm sure you don't want any parts of that. Divorce or asset division. So in a divorce, the funds in a joint account are considered a shared asset, and a portion of it can end up going to the ex-spouse, even if you contributed all the money. That's not good. Estate planning complications. Joint accounts with survivorship rights automatically transfer to the surviving account holder, overriding what is stated in the will. Gift tax issues. If you add a non-spouse to your account, you could trigger a federal gift tax if their withdrawals exceed annual gift tax exclusion limits. So this person's withdrawal patterns can cost you a tax bill. Operational and personal risks, lack of control over your funds. Any joint owner can withdraw the entire account's balance at any time. The bank will not intervene in the dispute between owners. Disputes and relationship strains. This happens all the time, right? Disagreements over spending habits or account management can occur, potentially straining the relationship between the account holders, leading to a massive dispute that the bank is not going to pick sides on. Impact on credit. A negative joint account that goes unpaid can be sent to collections and report to the credit bureaus, harming both owners' credit. Difficulty opening new bank accounts. An improperly managed joint account closure can be reported to check systems, making it difficult for both parties to open new bank accounts for up to 5 years. You can imagine the opportunity cost of not being able to get a decent banking relationship for 5 years. So these are just immediate issues on just joint bank accounts. What's not in here, I'm going to throw in for you because I'm a banker and see this on a regular basis. If any of you are negotiating third-party checks on the behalf of somebody else who maybe doesn't have a bank account for whatever said reasons, and you do, and you're looking to support or look out for somebody you care about, and you're trying to negotiate third-party checks, meaning the check is made out to that person, they don't have an account, they try to get the check signed over to you because you have an account and you deposit it or try to cash it. The check turns out to be fraud. It turns out to not have the funds. In some form or fashion, it gets rejected. Your account and your banking relationship is at stake. What's another example? Zelle transactions, Cash Apps, Venmos. You trying to do Zelles on the behalf of another person, or trying to do Zelle, or you on a joint account and that other person's doing Zelles or Cash Apps to another person, and it turns out to be fraud. It turns out to be illegitimate in some form or fashion. The entire banking relationship and the entire bank account and all of the funds in it, including yours, can be frozen. The account can be restricted. It can be closed without any additional statements by that bank. You can be completely blacklisted altogether just from being associated with someone who has bad behaviors or illegitimate, banking habits, or unknowingly commits fraud or has fraud committed against them. You can end up in a really bad situation through these forms of financial entanglement. So it's not just the joint accounts by themselves. third-party check negotiations, Zelle and Cash App transactions that go bad. All of this in today's world can lead to you getting completely your money seized, basically, and tied up for months at a time or longer, your accounts shut down, and even locked out of accessing decent bank accounts altogether, which again completely shuts out the ability to get home loans, funding for a business, credit cards, any of these other financial resources that you may be looking to attain on your journey to financial success. So what's another example of financial entanglements that can be extremely risky? Co-borrowing. This is another one that I see too many people do that people take for granted. So this is one that you got to be really careful with. And for those of you coming in, make sure y'all leave a like, make sure y'all leave some emojis and let me know you're in the building. So this is another one that people are participating in at scale that's crushing a lot of people's credit and finances. Co-borrowing. Having a co-borrower exposes you to significant financial risk, including the damage to your credit score from missed payments, full financial liability for the entire loan amount, an increased debt to income ratio that can hinder your ability to borrow, your own ability to borrow, the potential legal and collection actions by a lender if a primary borrower defaults. You also face the risk of strained relationships and the possibility of losing your own assets if they are used as collateral, all while having no control over how the loan funds are used or how the payments are made. That is a bad deal. That is a bad exchange. You're taking on a ton of liability for no control. So, but a lot of people do this because we think we love a person or we care about a person or we're doing the right thing to support a person. And it turns out that it could be a complete disaster, all risk, no reward. Risk to your credit score, future borrowing. Let's get into the weeds of this. Negative impact. The loan and its payment history will appear on your credit report. Late payments. Any late or missed payment by the primary borrower will negatively affect your credit score. Increased debt to income ratio. The outstanding loan increases your debt to income ratio, which can make it harder for you to qualify for your own loans in the future. Financial and legal obligations. This is tied to the joint account situation that I just ran across for you or ran down for you. Full repayment. If a primary borrower defaults and you are legally responsible for paying the entire loan, including all fees and interest, you could be fully responsible. Collection actions. The lender can sue you to collect the debt, which may result in wage garnishment or other collection efforts. No ownership. As a co-borrower, you do not have the legal claim or ownership interest in assets or property that the loan was used for. So you have all of the risk of co-borrowing. But if that person goes out and buys, a car, whatever the case may be, something of some kind of tangible value. And think more of a personal loan. There's cash, but then the cash is used to buy a tangible asset. That's a better example. You don't have any ownership stake in what that tangible item was. So you have all the risk for the loan, but you may not have access to whatever they injected that cash into. Relationship and control issues, strained relationships and no control. A co-borrower agreement can lead to tension and conflict if the primary borrower struggles with payments. You have no control over the loan funds or whether the primary borrower makes payments on time. Other risks, complicated future financing, impact of bankruptcy, potential loss of your assets. Another one that's popular, that's very similar but slightly different, co-signing. Co-signing a loan poses significant financial risks, including full and financial responsibility, again, like a co-borrower, damage to your credit score and missed payments, financial legal acts, wage garnishment, loss of assets. It may also be harder for you to secure your own loans, strains on a relationship, etc. So co-borrower and co-signer, slightly different, oftentimes interchangeable, but you're still ending up with the same level of risk exposure with little to no reward. Let me tell you something interesting about financial entanglements that many of you may not know. So there's no hard statistics or verified, respected data on exactly how many people have joint accounts that go bad or exactly how many people have, had co-signed or been co-borrowers and those loans go awry. But there are statistics and data showing that joint accounts and joint financial entanglements tend to lean to financial advantage of both parties. What that means in plain English is there's data showing that you have better financials when you have one or more joint account owner or joint account relationship. So let's get into this a little bit. Research suggests that individuals who have at least one joint account tend to have stronger finances overall compared to those without any joint accounts. So for those of us out here going at it alone, research is suggesting that you're worse off than individuals who have at least one joint account or joint relationship. This is likely because couples who choose to merge finances have a higher level of financial security and stability together. So here are some quick suggestions data-wise. Higher average credit scores. An experienced study from 2023 found that people with at least one joint account have an average FICO score of 718, which is higher than a 706 average for those who have only individual accounts. Interesting. Lower delinquency rates. The same study also found that delinquency rates were lower for people with at least one joint account. Impact of relationship status. So a UCLA Anderson Review article of 2019 noted that a couple who fully merged their finances had a higher levels of relationship satisfaction. This suggests that factors related to financial stability and communication contribute to financial health. So I don't know about you, but what they say is that we're stronger together. But I want to get into some other interesting statistics. First off, broader banking and demographic trends suggest a lower rate of joint account ownership amongst Black American borrowers compared to their counterparts. So lower overall banking rates. The unbanked and underbanked rate of Black households is several times higher than said counterpart. Smaller median account values. The median value of checking and savings accounts for Black households is significantly lower than said counterpart. Lower marriage rates. Black Americans have a lower marriage rate than said counterparts since joint accounts are primarily held by couples, and lower marriage rates likely correlate to a lower rate of joint account ownership. Financial inclusion barriers. Black households face persistent systemic hurdles to financial including lower income and wealth that likely impacts the formation of joint accounts. So I just went over some data suggestions that having joint accounts can lead to better financial markers, credit, and overall financial well-being. Black households or Black America has less joint account activity. We're underbanked and unbanked and underbanked at a higher rate than anybody else. But we're also, for those of us who do have decent banking relationships, we are less likely to have joint relationships, even though stats show that you're healthier financially. So what is this trend? What does this basically mean? How do we pivot this around and take a learning lesson from this and come up with a solution? This basically boils down to understanding building out your net worth is tied to your network, and developing your network, equally as important as developing other healthy relationships, is watching the negative ones and avoiding and minimizing the negative ones. This is hard for us because a lot of those relationships are going to be some of the ones closest to you. So I just went over a very significant amount of data and information that suggests that being in joint relationships or financial entanglements can be empowering financially, but if it goes wrong, it can completely wipe you out financially. So what this means is that you have to have a strong, conscious vetting system before you get financially entangled. The most common format is dating relationships, love life. After that, I'm sure it's going to be family, immediate family, households, and other family relationships. And from there, I'm sure it branches out. But the most common is going to be love life. And those of you who may not be paying attention or don't know, because I know one of the hottest topics amongst relationship degradation is infidelity, but financial stress is actually the leading cause of divorce and the collapse of relationships. So for those of you who get caught up and wrapped up in who's sleeping with who and who's cheating on who, believe it or not, money is a much bigger problem leading to divorce and relationship degradation or collapse. So money is bigger than who's cheating, basically. And that is the leading trend around joint accounts and financial entanglements. So that means you have to be very selective about who you get entangled with. You have to be very selective because, as you can see, and as a banker, I see these relationships all the time. I see couples come in who are both have good careers and they're coming in, they just got married all the time. And maybe they're just getting married, or maybe they got married and having a kid, or they haven't gotten married, but they had a child, whatever the setup may be. They set up their banking relationships and they collaborate and build something strong. I see equivalent or even higher scales of people running in the bank, alarmed and flustered, talking about how they need to get somebody off of their account immediately. And then we have to turn around and tell them the only way to do that is to close their account out altogether. You cannot remove the other person without them being present and aware. They can remove themselves, but you cannot remove them. And so a lot of times people's accounts are deeply entrenched. Closing it is difficult because all of their direct deposits and their money's going there. And a lot of their bills and financial obligations are coming from there. So they're in a tight spot because they're deeply entrenched in that relationship with their bank. They're also deeply entrenched and entangled with this other person. And that other person's draining funds, making poor financial decisions, or whatever they're doing, committing acts of fraud. And many of you are falling victim to this, and it is shooting down your ability to even get to the point where you're qualifying for other financial resources like credit cards, home loans, mortgages, accessing real estate, business funding to start, grow, and develop a business. The real financial markers that skyrocket you to growing your wealth. You're getting shut out before you can even get on that ladder. Before you can even get to that point in your wealth journey. Many of you are getting clipped down by financial entanglements. This is also something that is a bit of a systemic barrier because you're guilty by association. So banks are shutting you out just because you were in a joint account with somebody who did something bad. You were co-borrowing or co-signing for someone who did something wrong or didn't perform effectively or as agreed. And now you're getting a guilty by association negative backlash. Your credit is tanked. You're ostracized and shut out and blacklisted from banking relationships. This is serious business. It's very serious business. It's very important for each and every one of you to protect your banking relationship. Good debt and bad debt. It's key to understand the difference. It is very important. I would agree with that 100%. There is such a thing as good debt and bad debt. Or if you want to say all debt is bad, there's a big difference between one level of debt and the other. One is very useful, one is very detrimental. So I'm gonna actually wrap this one up a little early. Most of my live streams run up for an hour plus a lot of times. There's so much to cover. This one is a little bit more concise and to the point. And for that reason, I'm going to allow anybody who's live in the chat that has serious chats and comments that they want to leave around this topic or stories they want to share. Please feel free to do so. I'm going to give you a couple minutes. If you are on the replay and you've made it through this first 25 or 30 minutes that we're running into, I'm very responsive in the comment section. If you want to just leave a comment or share a story or insight, that would be great. Also, leave a super chat or a super thanks if you want to leave a comment that has questions or you're looking for some kind of guidance or instructions. I'll be glad to assist. For those of you who are new, I am a banker by trade. I have a mortgage loan originator's license. I have a state life insurance license. I'm a certified business banker, and I have a FINRA investment license. So for any of you who are catching this live or you're catching the replay and you've stayed out throughout this entire time, you have questions about your banking relationships, question about financial entanglements, or you have other financially related questions around the licenses and backgrounds that I just gave to you, leave a super chat, leave a super thanks, and I will be glad to dive into that question and see if I can assist you further. To all my pioneers, shout out to every single one of y'all who tuned in. I want you to specifically comment and let me know and share your experiences around any financial entanglements that have gone great or have gone horrible. I want you to comment on that down below. Anybody in the chat, I'm just waiting to give y'all just a moment or two to find out if you have any comments, thoughts, feedbacks, questions on this topic. This is very important. Very, 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 very important. This is happening at scale. So many of you, so many of us. I've been down that road in the past myself with joint accounts with people, you know, and just not paying attention and not thinking about the gravity of what I'm risking by entangling myself with someone who I cannot control and I haven't vetted to find out how they're going to function with their money or potentially my money or any debt that we co-borrow or co-sign on. So this is extremely important because we're talking about the foundation to wealth creation. Because if your bank accounts get crashed, I assure you, the banks are the gatekeepers to all the majority of the other financial resources. So if they tank your credit, if they tank your access to banking relationships through check systems or EWS, if you get tarnished there and blacklisted there, then you can be certain that any other means of legitimate financial success or wealth building is going to be extremely difficult, extremely difficult. So what this topic is essential. It may not be the catchiest clip, you know, the catchiest title or topic, but for those of you who tuned in, I'm telling you, this is detrimental. And the vast majority of you have been down this road, are currently financially entangled, and you just haven't experienced the negative yet. So you need to be mindful on this topic. This is extremely important. But I don't see any fresh chats coming in. I haven't gotten any super thanks on the, super chats on this, so I don't see any questions on this particular topic. If you're catching the replay, feel free to leave it down below. I'm very responsive, especially if you leave a super chat. I will be sure to give you a dedicated response. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. I appreciate every single one of you who tuned in. We kept this one short and sweet. It was powerful, impactful, and important. Once the video is all set up, come back, get in the description down below if you want to tie in on Instagram. Come back, get in the description down below if you want to work with me one-to-one to advance your financial journey, to customize your blueprint for prosperity, to shorten down the time duration it will take you to get to your financial goals. It is best to work with a financial professional. And I am very much so for over 12 years at this point in time. As I stated, with several different licenses and certifications that are the fundamentals to building wealth in this country. Navigating banking relationships, owning real estate, growing, funding, and expanding a business. It's all in my backyard. So if you want to get in with me, get in the description down below or simply leave a comment and I'll be glad to find out how we can connect and collaborate. Other than that, I want each and every one of you to stay focused, stay in motion. See y'all soon.